Hello everyone, welcome back to my channel. Today we are going to talk about the difference between IAS 17 and the new IFRS 16. So in this video we will discuss all the changes. So IAS 17 was the old standard and IFRS 16 is the new standard which replaced IAS 17 leases. IF 16 was issued by the International Accounting Standards Board in January of 2019, and it became effective for annual reporting periods beginning on or after the 1st of January 2019. However, early application was permitted. And in this video, I'm going to show you the differences between these two standards. So first of all, what does IAS 17 define? IAS 17 defines a lease as a contract that conveys the right to use an asset for a period of time in return for payment of a consideration. But IFRS 16 provides a more comprehensive definition. It defines a lease as a contract that grants the right to use an asset for a period of time in exchange for consideration. So there's only one word that has been changed here, but the impact of that one word is enormous. Because now it includes all types of contracts that give the right to use an asset for a period of time. Now previously under IAS 17, finance leases used to be recognized on the balance sheet while operating leases were not recognized. This resulted in a situation where assets held by lessees were often not properly reflected on their balance sheets, particularly for entities that predominantly used operating leases. IFRS 16 changes this by requiring lessees to recognize substantially all leases on the balance sheet, with few exceptions. This enhances transparency and comparability by providing a more complete picture of a company's assets and liabilities. However, IFRS 16 doesn't stop there. It also introduces some important changes regarding how lease liabilities are presented. Under IAS 17, lease liabilities arising from finance leases were classified as long-term if the lease term exceeded 1 year, or as current if it was due within 1 year. With IFRS 16, lease liabilities are always presented as current liabilities regardless of the lease term. This change ensures that all lease-related obligations are more prominently displayed on the balance sheet, making it easier for users to assess a company's short-term financing needs. Furthermore, IFRS 16 introduces some significant modifications to the discount rate used when measuring the present value of lease liabilities. Previously under IAS 17, companies had flexibility in choosing an appropriate discount rate, often using the lessee's incremental borrowing rate. IFRS 16 though requires the use of the rate implicit in the lease, which is the interest rate that the lessor is effectively charging. This change promotes consistency and comparability by ensuring that lease valuations are based on similar assumptions across different companies. However, if the rate implicit in the lease cannot be readily determined, then the lessee may use its incremental borrowing rate. Another major change introduced by IFRS 16 is the requirement for lessees to recognize a right-of-use asset, representing their right to use the leased asset during the lease term. This asset is initially measured at the same amount as the lease liability, which is the present value of lease payments. This approach aligns the recognition of lease assets and liabilities, providing a more balanced presentation on the balance sheet. Additionally, IFRS 16 specifies how this right-of-use asset should be subsequently measured. At each reporting date, the carrying amount of the right-of-use asset is adjusted to reflect any remeasurements of the lease liability and any amortization of the asset. One notable exception to the recognition requirements of IFRS 16 is for short-term leases. Lessees are not required to recognize a right-of-use asset or a lease liability for leases with a term of 12 months or less. Instead, IFRS 16 allows for expense recognition on a straight-line basis over the lease term. This exemption simplifies the accounting treatment for short-term leases, reducing the cost and complexity associated with recognizing these leases. In addition to these changes in recognition, IFRS 16 also introduces some modifications to how lease payments are accounted for, under both IAS 17 and IFRS 16. Lease payments are allocated between the reduction of the lease liability and the recognition of interest expense. However, IFRS 16 provides more specific guidance on how this allocation should be made. The portion of the lease payment that reduces the lease liability is determined based on the carrying amount of the lease liability and the interest rate used to discount the future lease payments. This approach ensures a more systematic and transparent approach to lease payment allocation. While IFRS 16 significantly enhances the accounting for leases, there are still some leases that are exempt from its recognition requirements. Both standards provide for exemptions for low-value leases and short-term leases, as discussed earlier. Additionally, IFRS 16 includes an exemption for exploration and evaluation rights. These rights are not recognized as a right-of-use asset or lease liability, but instead are accounted for separately in accordance with other relevant standards. Finally, the disclosures requirements regarding leases have also been enhanced by IFRS 16. Lessees are required to provide more detailed information about the nature of their leases, including the types of assets leased, the lease term, and the amount of future minimum lease payments. These disclosures help users of financial statements better understand the company's leasing activities and their impact on the company's financial position and performance. In conclusion, IFRS 16 represents a major evolution in the accounting for leases, moving away from the previous approach under IAS 17, which often resulted in operating leases being hidden off balance sheet. IFRS 16 promotes transparency and comparability by bringing substantially all leases on balance sheet. Its requirement for the use of a single discount rate, the rate implicit in the lease, also enhances consistency. Additionally, the introduction of the right-of-use asset provides a more balanced presentation of lease transactions on the balance sheet. IFRS 16's modifications to lease payment allocation and its expanded disclosure requirements further contribute to more transparent and informative financial reporting. As you can see, there are many differences between these two standards. Please let me know in the comments section below if you found this video helpful.